So the Aussie is in on the backside of that prior bullish rally. So all of this here has now been moved into, and we actually broke that bearish trend, that correction to the upside, and we had on the daily chart, this was significant. That there was a bearish engulfment. If we go into the daily chart, that was a strong move to the downside. We put in a week low for the week last week there, and we're coming up back into last week's highs. Now, while we're on that bearish trend, while we've moved out of that, there are prospects of a continuation higher. We've sort of got the double bottom here, and we would need to get above last week's highs to really fortify that thesis for a move higher. Now, having said that, we have the swing lows as a target to the downside, and last month's lows. We've still got in the money longs below last week's lows and here, so we draw that up below 65.96. Okay, so I'm just sort of drawing out the market structure currently. I mean, there's no real bias either way on this daily chart, other than that is a strong move up, and there could be momentum in it, but there's resistance that we're taking on. So if we come down to the 4-hour chart, I mean, essentially what we've done here is we've broken this structure over there. So these were potentially an important area of support down there that gave rise to that in uninterrupted 6 days of higher highs and lows, pretty much. Yeah, closes. So that could be a significant area. Now we've penetrated it with vigor at this point. We've moved up, we've moved down, so it's sort of been building around this area, hasn't it? This range. If we move down to the lower charts, we might get a better picture of what's going on. Back to the 4-hour chart. We've come up into the potential resistance of that formation here. We've got that M formation. We've come up into the neckline of it. Strong impulsive move up, leaving behind an imbalance on the lower chart. So if we go to the 1-hour, so just as a recap, what are we here? Are we bearish, bullish? I think we're just neutral, really. There's nothing here that jumps out that is crying bullish or bearish either way, although we have started to sort of accumulate that move lower. If we go to a clean chart, and we'll just measure it on so this, Let's go to a chart. What does it look like? Well, the weekly chart is showing that the price left a W formation, found support around the neckline area, and could be building for a continuation, or this is going to peter out and head lower. And on that basis, a 50% mean reversion could be on the cards. There's some imbalance here to get through. And then if we go to the 1 hour chart, we're between Friday's range. So we're heading up towards here, resistance, support, potentially between here and here. So range bound stuff really, nothing jumping out. Maybe a dip lower to come higher. So long as we stay above 66.50 or thereabouts, then the bias is towards last week's highs for another retest. And we could see that take place potentially as like that. So moving up into resistance, being rejected, feeling whatever imbalances are being left on the downside to test as support, to fuel the move back up into last week's highs. But either way, this is a coiled box that the price is trading within, and the longer it does that, the time decay effect will lead to a breakout one way or the other. We don't know which way. What we do know is that we're sideways within last Friday's range, inside day, and an inside day on Monday could potentially lead to big moves on Tuesday to set the parameters for the week, maybe the high or low for the week, to set us up for a trade on Wednesday. And we've got CPI, US CPI, to really determine the bias for the rest of the week and forthcoming days thereafter. We've got Governor Lowe of the Bank of Australia speaking, the Reserve Bank review and monetary policy. He'll speak on that and is likely to explain the rationale behind the recent pause in the market. In the statement, the RBA dropped all mentions of upside risks to inflation. So we'll have to see whether that rhetoric is continued, and we'll be looking for insights to see if there's going to be a notable shift in the bank's reaction function with respect to inflation. And then the US CPI will be the icing on the cake.